Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Morning, good morning. I hope you're all doing well. I've been up most of the night. Been sleeping very well. I think I've had less than 3 hours sleep, so I don't know how focused I'll be. So that's to take the consideration when I'm trading today. I think I'm just going to be doing lots more talking than actual trading. So I did take a few trades last night, one in gold and one in Bitcoin, or one in, was it in Bitcoin? No, it wasn't in Bitcoin. Yes, it was in Bitcoin. Let's go, anyway, let's talk about what we've got here. So far, we've come from box, and you want to look for the premium box here. So box to box trading here from here to here. We've entered into that right there. We've tapped it. And now we're up inside the premium box. That's on a 1 hour chart. We're also inside the 4 hour premium as well. We've passed the go, no go line for higher. And we passed through the 70% option trade entry reversal. So I'd like to see a return to this no go line and then start heading forward, heading higher, and see if we can't get up into this little bearish breaker above us right here, that bearish breaker. And that, if we're using marks talking about 3 a.m. candle, this one got tapped once. So I'm wondering if we're just going to get back up there and tap that again at 775. If it's going from 3 a.m. candle to 3 a.m. candle. I went back looking at these 3 a.m. spots, and a lot of them reach from one to the other. So I'm just going to see if it, out of curiosity, reaches for that 3 a.m. candle right there. I have to ask Mark whether or not that's something he looks at, searching out from one 3 a.m. to the next 3 a.m. This morning's 3 a.m. candle is sitting around here. We'll call that marks. Mark. 3. So if we go from there, looking for a reversal to come back to this 3 a.m. candle here. That would include the high of it. And looking for, again, we're right up near this consequent encroachment of the 4 hour premium. So I want to see if we keep reaching higher today, and reaching up for that breaker. And if we can get up on through the mean threshold of that breaker, then we'll reach for the mean threshold, which is also this 3 a.m. 8:15 candle. So we'll see what kind of move we have towards that this morning. Morning, Hans. And D, good morning. I am super tired this morning. I had a rough night last night. Wasn't doing very well. But thanks for asking. Russell, good morning. We're going to crush it today. Let's do it. All right, ES. From the 4 hour perspective, ES has got premium all the way up to here. I have to include that. That's what's left of our premium today. If you're going from box, or even down here, this box, open, close on it. We talked about that in the past, whether or not you choose to do that. If you're looking at this one's been traded back into, and from box, from downside to upside. So we've hit that already. So that's box to box trading in ES in a 4-hour chart. We do have a change in direction right here on a 15-minute chart. We've returned back into it, and we're getting back into the mean threshold of this candle. And you notice how that mean threshold is holding price right now. So you want to see that hold price before going higher. You don't want to see it drop below there and use that mean threshold to come lower into the range. So I'm expecting ES to hold price now and go higher on the 15-minute chart as well. And if you look at right there, that's the upside. I want to see if it can get through that, and then the mean threshold, obviously. So that's this piece right here. Dow Jones consolidation, displacement, come back and tap this high, CAM Model 1. This is looking like a great displacement candle for a CAM Model 1 entry for a long. And look at this sucker up here. Use the new week opening gap as support. Oh, we just need to see that stop right there. And then when the next 4-hour candle comes down, just give us an institutional order flow entry drill for continuation to the upside. I like that. That might be the play today. We'll see where that candle closes in an hour. I want to see that just end up being a small candle here right now, and then the next candle open, come down, tap it, and then start running higher. I'll catch a long right off there for Dow Jones today. And we're already in the premium portion, but I do like this as a CAM model. And if we close below 50% of that and start digging back into here, this could be a CAM 3 for a lower run. So I like it right now for a positive run, and it's not depending on how we use this consequent encroachment of this determines to me whether or not we're potentially running down, and this is just creating that false leg higher to reverse and come on us, because we're inside this little breaker right here. Takes at all these highs. So you keep that in mind as well. But I do like this as a CAM model for continuation if the other two indices look like they're going higher as well. This one, I got back in on the mean threshold of this one. It traded up higher and then started coming back down, so I got out of that trade last night. Got out of that one this morning. So I want to see it break these two equal highs here, use that as support, and then I'll be targeting for oil to get up into this range here. You're looking for it to get through here and then start running higher. So this level, that level we hit yesterday, bounced off it quite nicely. And I'm looking for these equal highs to get taken. And I want to see a bold candle get through there, come back, find support at it, or create the same thing we saw over here in Dow Jones. pop up. And this is displacement candle, give us a direction where it wants to go. Pop through here, come back. It's already ran this discount or change in direction here, and it's already hit perfectly off of a discount array below that consolidation that we were looking for. Yesterday, remember, we were talking about this as a market maker sell model, and we wanted to see it get below that consolidation. It ran all the way back up inside the premium portion, rolled over, finally broke the low, came back into it, ran lower, took out that low, and then hit the next discount array below that consolidation. We have a change in direction. We've come back inside it. Now I want to see this break above the high here and keep marching higher. This copper hit right off of our discount portion here. We've got a pullback. I want to see if we get back through here and above that consolidation there. I'm not that I'm trading copper or anything, but mom and dad, you're loving that. That's going higher. It's helping them. I like it. And the markets help out the old people. I get to be in that category now. So we have this change in direction below an old low, gap, trade above it, come back inside it, find support, take out an old high, come back to it, find support, carry higher. That's a really common, classic, powerful trading model. Trading to the premium array, body trades through it. We're back inside it now. I want to see this range extension. And I want to see natural gas go higher now. That was our upside objective for the British pound. And it ran to it, just popped through it today in a big way. So we're going higher, looking for the US dollar. We wanted to see it just come back into that level. It tapped it nicely yesterday or the day before. And now we've got this continuation. And now we want to see if we can get through this discount box down here. So we're still targeting down lower, while pound, we're expecting pound to go higher. Euro's back inside this breaker. Bit of a reaction off of that, and we've taken this low with a wick. This has to pull back through this candle for me to continue moving higher as the next price leg higher. CAD, I want to see this turn into a bull trap, roll over and come back down lower. Oh no, this is US CAD, not CAD USD. So I expect to see, I expect to see this roll over and come down. I expect to see that it turn into a bull trap. If there was weakness in the dollar, I expect to see this hold, roll over. Take out these equal lows here. And then use 137.2 to go lower. Oh, this is such a nice little run here. Look at this, came right down to the liquidity of the range. And you'd have to catch it at something on a smaller time frame. I was talking to Hans about this last night, saying we'd have to wait for a move, a displacement out of here. Well, you can't beat that kind of run, but it ran straight to the premium levels we're looking for. So I don't want to mess with let's go down to the lower time frames to see if we could have seen where that entrance was. So we get back through this level. You wouldn't have got it. Broke the high, you wouldn't have got it. So this level, that level, this all three of those you wouldn't have got on a 15, on a 5. Change of direction here, taking out an old low. It swept that low by tapping perfectly off the equilibrium. ran through it, ran through this high. You don't get that one. This one here ran through it. This one here is the last one. So you ran through that order block. You ran through the high that came back inside, found it here, and that's it. You got this one here as well. You ran above that high, you came back and tapped it right there. So on a 5-minute chart, you could have found an entry for along there. And you definitely would have found something on a 1-minute chart. But anyway, you can see it on the 5-minute there. So this would have been a nice little, hey, look, we're finally getting out of this range here. You want to see that clear it there? You know, great. Once we get above that, come back, find support at that candle and this new order block that we validated. You come back inside the high of it or the open of it, hit it, and keep going. So you'd have to have been trading on a 5-minute to catch it. If you were on an hourly chart only, you wouldn't have caught it. You obviously wouldn't have caught it there. No. Now that I look at it on an hourly chart, you could have seen this guy right here. So that rolled up, stayed inside, the body stayed inside it, rolled up one more time of right on that high, just traded above that high, rolled back into it one more time, connected with the needs to stay above that level, one I had on there a couple of days ago, and then tapped this equilibrium one more time, went higher. So yeah, if you were patient enough to hold on to that and you trusted that line. Now where's it going today, you asking? I want to see this candle here, right off that premium hold price. You can come back down into, I guess, the top of this first premium one. There should be 2 and 3, but I like to see it hold here. Line in the sand is that. You start working your way through that and wait for this breaker to get taken, because you could be a late in the game bull trap, even though you're right in the premium level, right? I'd like to see that mean threshold get closed above, and we'll see how we're kind of tapping on it. You want to see it close above it, find some support at it, clear out this, or you've hit the rejection block. So if that rolled over and then went all the way back down, pay yourself a rejection block. This is a cold run. I had this one last night. From here to here, I was expecting to see this run up to at least there. So I got in here, made it to here, out. See the reverse, literally off that same spot again to the same spot, here, here, here again. Off that price leg. That's a sensitive level. Came right back up into that premium level inside this small range here. And it's really got nothing in here that I can see that's going to support price. I don't use BISIs, I use the SIBIs on the discount side. So we'll see if that holds. We'll see if this last down close candle here, which is the breaker, takes out that high. If this closes below the mean threshold here, then I'd be looking for something like this to give way, or see if that high gets way for more highs. Bitcoin just placed above, you come back inside, carry up, premium array broken, come back inside this breaker, right to the very bottom of it. Those 3 candles literally taps the bottom of them, takes out the high, continues running higher, and you don't get any opportunity to get on there. Small change of direction, come back inside it. I'll expect to see this come lower now. I'm not interested in banks again for a bit. This has just run right back up into that premium. I want to see if that holds now or runs to this high. This is got equal highs. This has got resistance, resistance. Body's respecting that. Let's see if these lows get taken now. Or is this just a little run? I don't think it was. I think we're going to see a slightly new low for a run back up, potentially for a run higher in September, and then drop down again into this range here for October, and then see what kind of reaction we get from there. Little pigs. Now I want to see this level here, holding price, and go higher. It's kind of like this candle all over again, right? We want to see that mean threshold hold price and go higher. Mean threshold. You want to see a hold price, go higher. Get back through this level right here, 108.87. Disney. We wanted it to come back into this level yesterday. It did. We were looking at the low, the sell side liquidity, and then we said this candle's low or this low, and basically it came back. And if you look right here, this candle's wick, watch this halfway point of this right here. So I go to halfway, which is right there. Look at that right there. That's halfway through this wick. Consequent encroachment. Tap it. Not through this one, but through this one. Not that I was targeting that. I was just targeting the low here and then here. And you got pretty much between the two of them. So where are we going from here, you say? You'd have to start digging back up through, yeah, this is all fair game. This can run all the way back up into here. Here. We'll see if that gets taken. We're going higher. Now, if this has got some sense of urgency to get down lower, this should be the high right here, and then we should expect to see that come lower. We'll see if 114.99 gets closed below, then use that for support. Now that we've taken that high, I expect to see if this is going to hold now, come back inside it, keep going lower. I don't want to see that break through that to go higher if we're expecting this to go lower. Another great example on that this stuff works even in Forex. And all I've done here is outlined the premium box, the one we traded into, but didn't trade above, so we didn't expect range extension. And then it traded all the way back down, rejection block, get a change in direction, run through it, high, tap, continue, ran through this box, took out the high, and I expect to see it run back to that box. Or institutional order flow entry drill, takes out that high, and you see that reverse back into premium box again, taps it, trades up and above, old high, and carries on. So it even works in British pound, Canadian dollar. I'll keep that one to myself then. Why is the Aussie dollar always the... Okay, so the threshold, expect that to come lower. Looking at targeting this discount box down here again, and these old lows. Just turn this off for a second. See where we're sitting. Euro is traded above it. Above it again. You're right on it there, tapping it. Finally it rolls over and it goes higher. Changing direction, tap an old low. I expect to see that come back inside this range here now. Lines up with the new week opening gap. So expect to see this get retapped. I like that we closed above this. Now I'm going to see if this gap gets included and we close up above that little level right there at 34.80. And then you're back inside this range, and that's right above premium already. So I want to see if this premium level here gets taken out. Small little range. This is good. All right. Let's see what everybody's up to this morning. Well, it's good morning, but D, good morning. We're going to crush it. Good morning, Abs. Don't forget to give thumbs up for Darren. Thanks, Abs. Appreciate it, man. Good morning. I'm bullish in Disney. Agree on a gap up, Phil. You're looking for this upside here as well. Keep your eyes on this level and this right here. If you get below here on a close, look for the support inside this gap as well. That point right there at 115.09 and 114.99. There's a little area of interest for me right in here. So we'll see how that acts. We'll see how it acts inside there. So keep your eyes on that little area there, Craig. Ollie, good morning, Ollie. So if this is your 8 o'clock, 8:30, this is your run-up leg. Is that what you're looking at here, Ollie? Or are you looking at this? No, this is a 15-minute chart. Let me get to a 1-minute chart. So this is like a run-up leg right here till you get to 9:30. Now, if this is going to roll over and go lower, that 830 is pretty sensitive. Hey, Hadi, I do like it. Call that. I'm curious. I'm going to keep an eye on that. And we're looking for $355 is full banner right there. 5 banger right there. Look at that 5 banger. 574, 574, and then went to the moon, Alice. What happened about that? Where's our 6 o'clock candle? I like to see us run right up into that little spot right there. I'm just curious. You have to let me know if that's your that's right at the rejection block right there. If you took that as your 25%, but I think this might take a nice little run. There's 19 or 9, 16. Let's wait to see if that little pops up here, run up, and use this level here. I'm just curious to see what kind of reactions we get here. Um, are you looking for a long in crude oil? Huge overnight run on NQ. I'd like to see bearish delivery at the open for a gap fill play. Bank of England cut interest rates from 4.5 to 4. I was bearish. The weekly NQ is so today's the move down to all the smooth lows. A run following the big rejection would be great AM session. Yeah, we'd have to get below 572. We'd have to get below here on a close. And then I'd be looking for something like this. What else we got here? Nice regular trading hour gap today. Let's look at regular trading hour gap. All right. So what I'd like to see if your idea there, Ollie, is just to run right up to that 25%, clear out these highs here, all this, then roll over and slam it down. If that's what you're looking for, like a drive down, trade below the 25%, come back into 50% of this, and then run lower. If I understand your box idea, you'd look for 50% of that, retrace back into consolidation. This is all pretty much consolidation. That open midnight candle, look at how they're banging off of that, which happens to line up right with the 50% of the box. So you don't want to see this run up, clear out these highs, drop down the low, come back to these 830, and then continue coming lower. That's kind of like the idea I've we're looking for. So it'd be kind of like it would pop up above here. So right at that rejection block there, or take out the high. I'm cool with that either way. Then run down, then to here, and then straight down from there. Oops, and then down from there. That's kind of like what I'm looking for. This, it does the complete reverse of that. Works its way, sweeps this, goes high, comes back down to here, and then drives higher. Let's see how the, so if this continues to want to get back up into here, which it obviously looks like it's very bullish overall. So until we see a bearish move, I'm inside this range right now. From the range it happened overnight, 50% still back in here inside that goes in. So all that's free for me to keep going higher if it traces back into it. I'm out of curiosity. I'm always curious of these things. That lines up with the top of the premium box right there off of here. So right off that 70% optimum trade entry level. Anyway, oops, what did I just erase there? Premium box. I want to erase that one. Have I got your run the way you're looking at it, Ollie, the same way from this 8 o'clock run? Is that the same box you're matching out? And then you've got your 25s on either side. So you're looking for that run higher, lower, back to here, and then continue on the downside. Or you may see this higher, lower, run back into here, and then go lower, and you don't even get back to the 830. Too much consolidation there for me. Let's see what kind of reactions we get at 9:30. Sweep the lows. As you pull that down to there and to there. That's just bounced off this discount, which is, this is included inside this, so I stretched it out to include that. Now we have 929. We'll see where the next one runs to. We got a premium here. We got a mitigation block here. We have a retest at the just over the equilibrium there. We'll see this 930. You might just have a sweep on both sides. Wicks. It's a guessing game right now. Let's see if this holds. There it is. There's the 930. Right into the box. Now let's see if we start pushing on there. Sweep the lows. That's that little box there. A little imbalance there. Let's see if we push up. We've still got these relative equal lows here. That'd be kind of cool if that stays there. Runs this guy up and then comes back, clears up all that, and keeps running lower. Nice. You have to include this little sucker. I didn't see that guy. There. I had it hidden behind my little blue line here. There you go. See? I missed that little sucker hiding right there. We just came back and tapped it. All right. Oh, yeah, that woodpecker's on top of the aluminum again. It's up there. Good morning, Shepard. So this is box to box inside this large range here. I'd expect to see these highs get taken now. Inside this range, box to box, we've hit that. You want to see it pop through here and here. This was like incorporating all of these, like we did down here, this one, that one, and that little one there, and hit this one. Kind of stretch them all out. You see it ran through all of them perfectly. And then you want to see this one, this one. It's all kind of included here, all the way up to here. Morning, Mark. Ran the highs now. And we're into this premium box. Now I tap the top of the premium box. So let's look for this 25% here. Turtle soup, if you're into your turtle soup there, Ollie. Now the trick is if we close above, let's say we closed above it, tap it. You want to see it blast through your 25%, and we're going higher. We'd have to actually clear all the way through here to go lower. And obviously down here as well. Inside that huge range, you'd have to break this downside, come back into this and go lower. Look at that, right back in, nice little tap, fill, off the old high. I want to see that go higher now. Spread off your 25% there, Ollie. So you're short here, right? I hope this works out for him. I hope this works out for you, man. If this is your trade, I love to see that. You're watching his trade unfold right in front of your eyes here. So we've kind of mapped it out. We've already traded back through that level again, and now we're looking for a run down here. So this runs above, down to kind of like what I was drawing out originally. High, low, back into these midpoint. This did take this low with that little tiny wick. Low, high. Now, do you get long in here, Hadi? For continuation on the upside? I got too many questions, too many directions that could go. These lows haven't been taken yet, hey? Yeah, it's too consolidated for me. Nice big regular trading hour gap down there, though. Box to box, you mean? Yeah. And now we're below this level, consequent encroachment. See if this consequent encroachment gets hit as well, like to like, and see if we start to work through this level. It's an up close candle, Hadi, according to your, you were expecting to see upside prices. Yeah, it's just right back into this consolidation, just swept the highs. And now I want to see if we break out of here somewhere, otherwise we're still in this consolidation. I like the fact we're still holding inside the hourly VISI or fair value gap. wait for the macro. Your idea. Took out the high. Seven 725, and that Mark's idea of Mark, have you ever used this kind of like your 3 o'clock to 3 o'clock candle? I've noticed when I was doing this back testing, a lot of them just kind of go from one to the other, but you know, you could say that about a lot of candles really, but is that a theory or a principle you aspire to? Looking at from 1-3, and not just come back and tap it, but to look for, if you just leave it, that it heads for the next 3 a.m. candle. There it is right there. Long, right off that candle. Takes out this candle's high. Comes back to it. Now you want to see that keep going now. I want to see that stay open. Just keep going on there. %, puts us right on the, if this comes back and gets retested, 50% puts us right on that 1 minute, right there again. Tap, now leave from there. No, don't fill it. It filled it. So now we've got change of direction here. Here, if we close below it, retap your first fair value gap again. Right through it. Back inside this one. I'm not touching this, it's all over the place right now. I keep looking at ways you can argue both sides here, so. Six a.m. candle. That 6 a.m. candle apps is a very important level. Reach right up into, did we hit that? 659? No. I'm gonna wait for 10 o'clock. We look at all of this. That's consolidation. That's right there. This would be a CAM model 2. If we get below here, come back into that's a CAM model 2, CAM model 1, and then the CAM model 3 is off of here, which should put us, this is going lower. I'd like to see this. Puts us right in the middle of that first presentation as well for CAM 3 once we get below that low. Trade below it. Give me a nice displacement candle down here. Trade below that level, trade it back into it. I want to see that low take off from here. That's a short entry right there. If we get back through that, then look for that. Still haven't got a CAM model here yet until we get a displacement. If we get a body back through here, you're back inside this range again. So right there, I want to see that hold, roll over, and we've already got range extension. We trade it below that little fair value gap, trade it back into it, range extension. Now we're back inside that piece there. So come on down. I want to see that one little pop up into headies 830 there, and then I'll go short from there. Short right there. So we run out the highs, run out the low here, turn into this. I want to see that roll over and come lower now. And then I have to be above here. So that's the premium, and look for 50%, that's 62% of this range return. 50s there. 62, I'd have to be above, you have to get above this level right here. There's 50%. If it closes above that candle, back inside this range again. That's box to box. And we're way above here. What's this? This is my optimal trade entry reversal. 70% right there. Just tap that premium box. Yeah, that's way above where I want to see it go. I don't want to see it get back above here now. See, it's already traded above this level. So when we talk about that candle to the left, it's already traded through that. So my fail-safe typically would go, but yesterday I was taking hits and I wasn't giving it enough room. Now I sit and I see this, and it looks like it's going to come and take my stop loss now. If it gets through that level, it'll take my stop. It literally is done exactly where you expect it to go higher. It's going to get me now. And you see it right there. It's worse when you see it, you go, it's running up there. I got thrown off the horse. Watch, there's a little spot right there too. It just hit the edge of that. And watch this little shit come around back on me here and come back down and take that out. Wait for we get a body below the low here now. And this discount box hasn't even been hit yet. I'm gonna re-tap that right on that close there. I resistance. So if you follow the rules of the 830, as soon as it breaks that high there, there's your first indication, and then if it takes this candle to the left of it on a close, it comes back, gives it a little kiss, and then runs to the premium, rejection block. Makes sense when you see it. Even when I thought is my stop loss here, we see it coming back here. That's going higher. It's going to take me out. So anyway, yeah, you can see why. If you don't follow the rules and say, look, that's got to be my fixed point, I got to guarantee I'm going to get out there if I'm on the wrong side of this. You get to see it takes full stop there. And if you had your stop loss sitting up here, it's about to take you out as well, right there. Continuation on the upside. Seek and destroy both sides of the market, take out the shorts, the longs, and then sends it higher. I'm looking for here. Eliminate this idea right now. So there's your premium, highest premium box, breaks through that, comes back, gives a little tap, takes out the high, range extension. You're back into the consequent encroachment of this wick. Keep going higher. You'd want to see this just keep going higher now, not come back. This is into 50% of this wick. Go higher. That's it. I want to see it reach up into 725 and this 3-minute candle above us. He never did answer my question mark, did he? In retail, they call this the megaphone. The megaphone? I'll wait for 10. Can you take a look at gold? Yes, sir, I can. Yeah, you're inside this range right now. So now, since we last had our little chat, this is your 15-minute becomes an inversion the moment we close it. We just reclaimed it multiple times here. Now we're running through it. So you want to see a market structure shift, and then this mean threshold down here. It might be slightly off there. It's a 15-minute. I want to see it get below this. I want to see a market structure break. Consolidation, CAN model 1, right up inside the range. CAN model 2, I think that is. From here to here. Oh no, let's do that. Just do equilibrium there. I'm trying to pull that up from there to there. Right there. That consolidation right there. Pop, oops. CAN model 1, back inside that range. CAN model 2, 50%. Run up to the premium box. I want to see that now we've closed below this level. Do we use this for support, and do we get through here? And you're in a small range, so this right off that last mean threshold we talked about, right there. That's bouncing off there now. And also this this little Bessie here. You gotta get below here. Watch that level, this and that. If you get through here, use this, keep pushing lower. And then you're looking for this little guy down here. And I would put him, or what do you want to call it? Personify it for you. So you can get through this level. And we're already digging into this wick, so it's drilling down, come back into that level. See a body stay below here, come back into this little breaker that takes out that high, and then see if that holds, rolls over and comes back through here again and starts drilling down into this candle. If we take that one out on the downside, I expect to see this hold to come back down to here. Then if we drill through that, then we're looking for the next discount boxes over here. So watch that level. I like the fact that we're popping through it already, but I'm going to see that get a body close below there. And then look for a run on the liquidity below the market. That's what I'm looking at there. Football. Bitcoin's going on. Consequent encroachments are nailed. Bodies are respecting that. 10 o'clock. Just too choppy for me. Watch that level Craig. So it's banging around in there right now. Just nailed it with the wick. I want to see if that holds now. Or if it just pops through it on a close. It's the next hour, so we had a quick run up above this liquidity, digging into this gap. Just shy of 25%. What did the Dow Jones do? We wanted that to give us this CAM model entry rate for a long. I'm going to take 2 longs there, just because it's sitting on a CAM model. I'm going to take that as a stop loss. Go down here. If that runs through the mean threshold of that candle, fail safe is sitting right here. If we lose that on a close, I'm out before it takes the stop. It does not do it on there. Right here, doesn't even do it on there. It's this thing right there. This, I want to see if this holds price right here. I'll put you right into a cam too as well. And then see if that goes higher. Too choppy. You're above here, you're below there. Rejection block inside this range. Nothing clean. Just wait. That's a 4-hour EM. So ideally, you want to see that stop right there. And it's inside the fair value gap. So the mean threshold of this candle. So we get a pull back there. It's a little piggies up too. There we go. Let's go, little piggies. Are you still in this, Abs? Good morning, Derek. There's a lot of ads I see popping up today. No, you got out, did you? Okay. Fair enough. Let's see, let's hit our objective we gave it yesterday. See if we hit that box to box level. I want to see if this provides support. It did. And now we've got the rejections. You pay yourself on live cattle there. This is the one that kind of lined up. I don't know if I lined up that last night, yesterday, or what, but that's the reverse situation right in here. Body, tap, go, pay, let the rest run. Move your stop loss to break even below the mean threshold here. Let it run. Mean threshold. You opened above it. You want to see structure break if this is coming back into this range here, from here to here. Puts us right. A little tiny imbalance right here. Let's see if we reach for that. Premiums, see how the premium held. Do it like this. From there to tap in that old high right there. Those two little spots. Oil, what's that up to? Get right back up to that level again. Relative equal highs. Now we're right back inside this consolidation again. So let's get a break out of there for me. This isn't even worth playing in. It's too choppy. Nothing clean there yet. So if you're putting your money at risk in NASDAQ, you're just going to get beat up in there right now. It's not giving you anything clean. You want to see this whole level get taken if you're looking for a run lower. It's got to get below 570, 571, 570. Yeah, it's got to get below there on a close. I mean, like something that distinctive. Blam. Come down. Let's see if we can get some support. And then this level becomes important. Still dumping. Oh, it's through me now. I'm out. It's through that level. Close below here. Reach into here. Mean threshold next. That could quite easily just react off of here, but it's through two levels that I didn't want to see it get through, and through the mean threshold of that candle. So this could end up being a cam 3 here. And it can completely reverse, come back into here. 1 all the way up into the bodies, and 2, and 3 back into that. Bet you that's 50% there. If we took that from there to there, 50% here. No, we took that one. No, I'm not just trying to form fit it here. No, it's close. Just pop it above that, gets you into here. Nope, 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 nope. So watch for this. If we run through this, come back into that candle, see if that runs lower from here. That's a 4-hour inversion. Right there. Yes. It finally gave way. Let's see, let's get through here. Change in direction right there, taps it, takes out 1, takes out 2, takes out the low, look for this support, the next discount box to box inside the larger range, oops, inside the larger range here, there to here, we're inside that now, so it's box right there to box right there, all in 1 hour. I want to see if this 4-hour one gives way, find support at this, start running for these lows. They're not moving in the same direction. 2 want to go low. Low wants to go high. Gotta wait for this breaker to get taken out on the downside for a 15-minute chart. Wait for a structure shift here, and this breaker, along with this 15-minute. There's nothing in here that tells me it's a short yet, Ollie. We have no market structure 50 up. Must be really pushing their commercials this morning. I've seen lots of them come on my channel, so you guys must be getting hit with lots of them here. This is not fun. Hourly fair value gap still there. My short was wrong. Need to close below that short. Be careful. That short market, no rush. We'll wait. Just follow the rules. Here's the continuation. Through this level, we wicked right through it. Took out the lows. Still nothing super clean yet for gold. Run on all this liquidity down here. You want to see this close below here. Use this. And if we can get below that level, I'll use that and this to go lower. Just be careful this isn't a stop run and reverse. If it is, it's got to get back through here. Take out that candle and then premium portion, then that breaker there. This could just go big choppy back and forth. We still have that premium portion that's still untouched up here. We came up to 75% of this and then rolled over, took out the lows. Through that discount box, from premium to discount, instead of that larger range here. Box to box. Now you want to see if this holds and comes back, or we pop through this. We've already ran the lows already, so this way you're going to be cautious and say, is this a stop run? Oops. Back. And where do we close? We're back up inside that little premium level again, ran through it, back into it, reacting off of it. So I want to see a market structure shift here. We've got a couple of little wicks through this now. There's a tiny imbalance down here, I think. If I look correctly, yes, there is. So you must include that as well down there. You gotta include that. So look right there. You see that? When you have a SIBI and you have this imbalance, you have to include it as well. So don't just go to the wick. You gotta include it all. I just saw that. So if we get a body below here, look for 50% of the wick. And this, that discount pops way over here still. That's my target hit, entered at 10 o'clock. Let's see if this candle closes here. This is a 30, 25, 27. Run back into here. Not clean enough for me. That's a 5. 1 minute. Body traded below here. Get short there. Take out that low. I think that's all in the same candle. That's the 5-minute one here. I'd like to see us get back to that 592, 593 level. Yeah, I see your entry here, Honey. This change in direction here, nothing clean. Change in direction here. Pop through. Take out this candle, the close, come back inside it. Go shorter. Take out the discount box right here. You could short right there. That's just it. If you shorted then that there, inside this choppiness, then using that rule, if it breaks below it, then you got a short there, aiming for there. Quick little run, take it. I can see the entry, but it just doesn't seem very clean for me. This is a return to here, I like that. Roll over here now, take this low. I'd like to see us revisit this one more time here. But if that's all it takes is to return to that low. Look for this next push down into this midnight open range. So you got 80 points there, Ollie. Good for you. Thanks. That was all my mental capital gone. Done for the day. Good for you, Ollie. Well, I could close my charts, gaining 80 points in one trade. If you put that there, that puts you back into the midnight open range again. I wanted to see that. Oh, it did get it already. So this is the hourly candle. We've got that. You see this right here? This hourly. We're getting a break right here. I want to see us tap this at 11 o'clock. You can run all the way back up inside it. Ideally, the consequent encroachment is the line in the sand. Tap it, roll over, and come down lower. It's got to close below this level here, though. You have to give it a full chance to run all the way back up into that level. You don't want to see it close back above here. And this is just enough to create enough wicks to come back up into the mean threshold of this up close candle on the hourly. That would be the kind of wick saw crap that you could see. Low taken. Tiny imbalance. Civvy here. You're going to tap that. Mean threshold has already been hit. You got to drag back through here. Close below that, tap that, come lower. If it's just coming back to tap this old balance here, run through that mean threshold, look for the high to get taken and run back into this range. And I like this little area here again. You get back up on top of this, find support here and get through this civvy. We're back into Chopsville again. It's not giving you anything clean. I got my 15-minute right here. Five, 7, 8, 580. Watch for this to push up just a little higher. 578, 580, and roll over and keep coming lower. We could see this wick all the way up into here. That 830 candle again, and then roll over. That's just the kind of chop that's going on inside here right now. You see one more push back to here. That 15-minute one. That'll put us right inside that box I'm looking for. The 430 candle, you say? Oh, this one, yeah. We've already chopped through the mean threshold. See that? How we just smashed through it multiple times. So that's like an early drill. I just want to see it wick up in here and then drive down one more time. Because now we're breaking this breaker on the downside. I want to see it come back into it. The body, mean threshold of these two 15-minute candles. puts me right on that 8:30 candle again. So I'm gonna wait. We have to get through here on a close. I think this has still got potential to come back into here and here and roll over. It's not clean enough for me, but that's what I'm looking for. It's a 6 a.m. candle as well. See how many confluences you have there on that 15-minute chart? The 5-minute, the 1 minute. You got the 6 a.m. You got that 15-minute. You got that 8:30 open. And you're right near that first presentation as well. So that whole area there is a draw for me. And if we take, I'm just looking for more confluences here. This consolidation, can too, puts us right in the middle of that cluster there as well. Now what I want to see is Dow Jones in the next 21 minutes stay down here below this level and then use this level right here. I'll just put it as an area of interest instead. I want to see use that as a retracement area in the next hour. See if it comes back into this box, taps it, consequent encroachment. I'm happy with anywhere inside here, and then a continuation on the downside. Ideally, I don't want to see this low get taken here in the next 20 minutes. I just want to see it close below here. Use this to extend the ranges and get back into discount one. I could give us this one here too. Right there. So I want to see this hold before taking that low out. Freeze anywhere inside here. Come back in. Find support inside here. Run for discount below us. And I want to see this piece stay open. Be nice to see it come back into this new day opening gap. Freeze up on there, come back lower. See how choppy this is? Got 18 minutes on the hourly. Close below the hourly turn and below this first candle here. How's gold doing? Football was asking about gold. How's that turned out? No body below here yet. We're still in this consolidation. This range, the kind of range bound. We got a wick here, so you have to include that whole thing, but there's nothing decent over here. So that mean threshold's still important for me. I want to see if this little breaker here that takes out these highs is going to hold price right there. I don't want to see that go higher than that. Roll over, come down. Let's see if that holds inside here. I'd like to see if that comes quick encroachment holds. Bitcoin did not get below our low, so you wait. The DAX has not got back down to our 50% of this range or this little low here yet, so that's a 4 hour. Oh, it's a 1 hour. Immediate rebounds. See if it closes below here. And then I'm going to see if it uses this for support to come over into this range here. Still hasn't got through here yet. It hit right on the bottom. 15 minutes to go. Swept the lows. Come on, creep on up there. What happens 11 a.m. macro 20-minute period? Usually there's a retracement between 11:30 and 1 o'clock actually. There's a retracement, or 11 o'clock. It tends to retrace over the last low taken at 10:30. So this level here, you can see it run it out after 11. We get a retracement back into here. If this is a continuation, you'd expect to see something around 11 o'clock. Still haven't quite hit that level I'm looking for. Oh yes, we did, right there. I didn't take it. That would be awesome if I just ripped right through there now after waiting for that level. right there. That would be funny if it just took off right now. I've been waiting for this level from there all the way up inside this box, and that 830 all the way up to here. And it just, how's that for, we're just going to touch it and leave. It still might get back up there. Below that level, tap into it, keep coming. What's Disney up to? Still coming lower. We got through that level. That was the fear, right? If we break through this level, then we're going lower. Now I want to see on the lower time frames what happened in here. So go to the 15-minute level. See how we broke below it? Come back inside it. Right there. Went lower. That's right on the 15-minute level. 5-minute level. That's a little tiny fair value gap in there as well. Drop below it, come back inside it, went lower, took out the low, come back, gave it a kiss right there, keep coming lower. Now I want to see that level right here, 113.58 to 113.68. Get hit. If we drive through that, then I'm looking. Next macro begins now. So you want to see this is still kind of consolidation on a 5-minute. So I want to see that really push through this level 13.59. Ran the low. So if you're paying, you're looking for an entry there, you pay yourself at that low, rejection block low, whatever you want. There's a small little imbalance here. If you paid yourself there, those are fine too. Now it's coming all the way back up again. Watch for here. Inside this box. I got a 6-minute, I got a 15-minute, a 6 o'clock, 15-minute. Let's see this abs come right into your 6 o'clock. Just tap it or give it a little kiss in here. Right inside that 6 o'clock, and then roll over and come lower. That would be a beautiful little run. You're buying Disney for a long? Craig? At 114. You're buying it at 114. So right there. Small position. You're buying it at 114. So you're buying it right here. Okay. What's your reason for that? Other than that we're in a higher time frame. Maybe 114.70 or below 114. So we get below 114.49, 114.50 on a close. And you are. I think that's coming lower, Craig. Go with your instincts, man. I think it's coming lower, but I'm not studying it enough to get a good beat on it. It feels lower to me. This level, God, it's just baffing around inside there. Hit that premium box in cocoa. Where would I go for live cattle? That's where I'd be looking, in or around that area. Sugar. Sugar. I would like to see sugar reached up into our upside objective here. Downside objective is here. That's box to box trading inside this range. Box to box. Now if we see it get through 115.97 on the close. Sorry, at 15.96 on the close. And then I want to use this imbalance, that whole imbalance to go lower. Take a mean threshold rejection block, wick low. Sideways. It's holding right on that spot so far. See if this turns into a wick and comes lower. I don't like the fact that we've already eaten through this mean threshold on the way up. I'd like to have seen this close below here. It didn't. So you wait for a close below that level. The wicks don't count. So you're still waiting for that. That's why we got a deeper pullback. So, you know, you get a run back up into that 15-minute spot right here. I don't want to see that mean threshold give way though. An ugly wick into here, acceptable. If you're looking for some precision, look, it's got to hold there or right there at that mean threshold of this candle, and then roll over. Take this candle on a body close, then use this as support to continue pushing lower. To get back into a 15-minute fair value gap. Well, that's what that hit. That's what that hit. Mean threshold. Overlap. That's just way too choppy for me to really love that as a low, as a short. But it's panning out. Ugly as it is, it's still panning out. Last time D did this Disney to me, it went to 82. Don't do that again. Sorry, Craig. I'm just looking at something. I don't see anything short in there on a 1 hour chart. I'm not rifling through all the charts to get specificity, but that level there was important for me, and it's broken. So to me, you got mean threshold here next at 113.38, at least of the hourly wick. So 113.28. So you're digging back into this next discount box here. and then see if you get through that, and then look for the bottom half of the wick. So 25, 50, 75. Look at that wick and divide it into quarters and see how it gets worked. If you take the 50%, chances are you're going to take the low, and then look for this discount 2, discount 3 below you. And again, if you keep finding support at this to push through, support at this, push through, support at this, push through, that downside objective for the daily inversion is where I'm looking at 109. Now, I'm not trying to influence you in terms of your trade. I'm just telling you what to look for on an hourly chart. You could see a wick and then reverse, come back up into this. But I'd like to see right on that candles on the top of my area of interest there. If I was starting to chop up candles, I'd look for any candle that traded below it and then back into that candle's high, which is that traded below it. Just look at how close you were. I'm going to stretch this out so you can see it. Look how close you were. Traded below, came back up just shy of hitting the top of that. There's your first presentation. Fair value gap on a 15-minute chart in Disney. You traded below it, perfectly came back, tapped it, and we're going short again. We've taken out this 114.08. If that closes below that, then you look for this whole, that whole area. I'd like to see it just come back and tap that at 114.08 and keep coming lower. You're through this candle's mean threshold. Yeah, it doesn't look good, Craig. Sorry, man. It would have to do wicking to throw me off. That would have to wick back through some serious chop. I have to get back through here for me to be bullish on that again. Ideally above here in that premium box. That's just me. I've been wrong a lot lately. My stop losses have been too tight. I still get the direction, but I've been a little too tight in some spots, so I could be wrong. Back to this low. I still want to see it run back up into here. Yeah, I still want to see it run back up in here in lunchtime. 11 o'clock would be a nice little punch up in here. That would really piss all these people off who are in this getting beat up in here. Just to see a run up here. Then a nice clean, see price action clean up a bit. Because I want to see this hourly return back into this. Now that we've got a break in structure, I want to see this return back into this last down close candle and that busy. If we don't, if it continues to close below here, I'm looking at this one. Tap it, and you're already into the premium or a discount portion of this whole range here already. So you'd have to grab it a premium to sell it at a discount. Looking at an hourly chart. There, we've closed below that level now. Let's see this run all the way back up into here. So you've got the first level is right there at 576. I'll put them on here as you can see them. 576. There's one. Next level is right there, 2, and then the next one is right there. It's at that box again. And if you start chopping through these without precision, I'm not interested. This should be 11 o'clock. We've got the macro beginning now. This would be the time for it to start to turn on you. I like this immediate rebalance to this candle's wick. You come back down, you give it a little tap, clear out that candle's high, and then we start running back inside this range again, right at 11 o'clock. Regular trading hour gap is not fill on ES. Oh yeah. I don't have this one on my need this one. I do, however, need this one. Yeah, it's completely filled now. I'm not interested in anything until I see something come back into there. Or I break market structure on the hourly. If we get a bounce off this consolidation here, this is a cam 1, late cam 1, back down here tap. If you want to see that push higher, this cam 1 and 2 must hold, go higher. And this is just too much chop for me. Good wick, help training, thanks. You're welcome. Yeah. August just isn't a good month for me historically. I just can't be comfortable with pricing. It's true. You're in the summer. It's going to be quite choppy in the summer. You have to keep that in mind. And remember, Jackson Hole's coming up on the 3rd week. So traditionally, you'll see a turn in August. If you look at the August daily chart, go back to August. Let me show you. And this is where you'll typically see markets do turns. This is September contract. If you see the continuous NQ, April, May, a little dip in May, runs up into July, August. There's July. Now you should see August. So I'll go back into here and look at August. See your August right here. July, August. Let's go back even further, another couple of years. June, July, August. 3rd week of August. See that? The Jackson Hole Summit. Then into October. So you always typically see a run up into September, then down into October. Wait for the reversal to occur in October. And as soon as you see a low get taken, wait for the first fair value gap to form and take that high and go for it. Like you literally see it right there. It takes it, closes above it, opens right on top of it, and then leaves for the rest of the year. Right? So that's what you'll typically see for what I look for in terms of seasonal tendencies anyway. And I look for that opportunity in the July, August things. Here's July again. Oh, that's August here. July is down. June, July, August, third week. You will look for a reversal, any reversal opportunity. Look for this low to get taken here. There's a small little premium right here, or sorry, a little BISI on this side. The third week, you start coming down and go, if I take out that low and return back into this candle's high, and literally right there, tap anywhere inside this breaker is great for me. And then you get short from there into September. There's a little run up, and then right into October, wait for your reversal. So wait for this high to get taken. Comes back. Oh, that would have been an ugly drawdown for the rest of the year anyway. So if you would have caught this into the rest of the year, it would have brought you to 14th draw on. That would have been an ugly kind of, you'll see the reverse right here. So as soon as it takes highs, you got to pay yourself. That's the discipline in paying yourself at the highs. So if it takes that high, pay yourself. If it takes that high, pay yourself. Change in direction. Takes out this low right here, comes back, taps it right there. Roll over, go lower. Discount box, trades below it. Range extension, pops below it right here. Then you wait for market structure shift, takes it out right there, returns to it right here. Run back up to your premium box. If it takes it out, it does, comes back inside it. Here, trades higher, takes the high, and there's your next reversal. Taking out that low. Anyway, that was a couple of years back. You get the idea. That's what I'm kind of looking for. I can digress here. So I'm looking for these little imbalances right here. If this August, if this is like the July swing low and August makes a high, then August makes a high down into September, and then October makes a new high, and then reverses. That'll be the complete opposite for a bullish type market to reverse. So after October, we might see a decline if it's all going in the opposite direction as it was before. So you'd really have to get below 864 to see a market structure shift here. Like a significant shift would be down here for me. But let's see what we get up in here. That's a daily, hourly. We're up inside the premium of this range already. Inside the gap. Changing direction. We got a new one here. And I want to see that come back to 573. So that brings us back down into our 1 minute chart. And 573. Oh, sorry, that's that. We want. Thank you. Get back into our contracts. They're going to be slightly different. $573. That puts us up inside these little suckers here. You're looking for a midnight open. Let's get it, a D. Come on, man, go get it. Man, that's it. You're getting spun around, Hadi. I'm surprised you're not throwing up right now. How many times that horse has been spinning around on you? She's spinning around like crazy, up and down and jumping and kicking. That is a cheese grater market, man. Cheese grater market. Yo, yo, Kamal, how are you doing? Not fun for traders. Yeah, I agree. If it gets above here, then the horse is running back up into the premium portion, and jeepers, that's like way up here. That's all I can see up there. Imbalance right here. It's still bearish. All the time we're still below here, we're bearish. Traded up into it multiple times, wicked up into the rejection block. Keep coming. Keep your eyes here for lunch or after lunch. This is a big retracement back into here. Mm. 4 hour go, no go. Higher or lower. Hit it, opened on it, closed on it. Went higher. Now we've gone through it, tapped it. I want to see if we get through the bottom half of this go, no go zone. You're still on this, Hadi? Just be careful for, you may not be able to reach into your thing. Now, if you're looking at this reversal up here at the 4 hour, and you say, I'm targeting that 3 o'clock mark 3. Mark 3. You're hitting it right now. I don't know if that's one of Mark's ideas, looking for that and then a retrace back into his 3 o'clock candle. If you break that low, look for a run into the 3 o'clock candle, which is right here. That is some chop. You're not in? Okay, gotta put it on some time at the pro shop. See you later, Derek. Enjoy your day, man. New week opening gap at 11 a.m. It keeps coming lower. Still discounting. That is some serious chop, man. Okay, so it's been through this one. It's now, if it closes below this one, I'm looking for 538. 38. Right on the 50% of that. See that? Just nailed the 50%, and we're getting a pullback now, and it's a nice, sharp, snappy pullback. Now we've had no close below here, so this is still open for me. And that whole thing goes from here to here. Mark's in the buy. He's buying off the 3 a.m. candle, I bet. Is that your 3 a.m. buy, Mark? Now you're looking for 3 a.m. to 3 a.m. above? Up here? Immediate rebalance. Start going higher. We've traded below the 5-minute discount. Typically, you want to use that for support to come lower. So you traded below it, into it, went lower, took that low, came back to it, took that low. Now you're trading back to it again. You'd have to take that low, or you'd have to start climbing up above it. D says, check out the 15-minute, man. Yes, 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 yes. I see it there, D. We've used that order block right at constant. That's right on 558, hey? That discount. And now you really want to see it take off. If that 15-minute one, then you guys should see this, what D's looking at here, this thing. So we've had a body trade below here, like a market structure shift. We've had a full body below there. You've come back into that main threshold, but we're coming back into it once, twice. You want to see it tap it and leave with intention and get right down into this discount box down here, or at least back into this breaker. And it's revisiting it. That's why I'm thinking, yeah, I don't want to marry the idea of coming back. But if we do get an ugly wick come through, look for a run back into that level right there. The bottom of this order block is also the first level. I'm looking at the 574 on a 1-minute chart. This one right here. So just kind of keep your eyes on these levels here. I do like what you're looking at though, Hadi. You're looking for a long there. Partial. Still in. It's above here now. This looks good. Keep coming. Looking for this first level right here. I'm out already. Out. 2 contracts, small gain. We're back into that mean threshold of that 15-minute propulsion candle. It's being worked quite intensely. All those data points just hammering off of that area. So you want to break through here now and use this as support to get back up in here. And then my eyes are looking at this area to see what happens. Ah, you sneaky little rat. I gotta go there. What's that one? 602. Changing this to 602 right there. Small little breaker taken from the upside. I want to see this wick hold price halfway. So this candle's open. I don't want to see any more net candles open get taken. Mean threshold is not where I want it to go. Right there. And start going higher. Good. Validated this candle now. So clean would be like right there, tap that, and then go higher. Right there, and now go higher. Go on, get up there. Come on, get up. Giddy up, little doggy. Nope. Nope. The moment it starts getting below that wick, nope. Come back into the breakers high now. Or it's closed, I should say. Made it balance. Nope. It's going lower. That's already eating through that mean threshold already. Looking for this guy here at 24. Now see if that holds when we get back into here. Or I guess it would be here. If we lose that mean threshold on this candle, your ass is next. This little breaker right here that takes out that high and that high, I want to see that hold. That's mean threshold is your line in the sand, right? And that's sitting right there. Nope. Your ass is next. Coming lower. All right, see you later there, Deep. It's a very hard day. Not surprising. It's a hard day. Look at that chop. It's been choppy all morning. Low, your ass is next, so that took the low. Have a great day. See you later there, Hadi. Good work today, man. Way to stay on that horse. Curious about 520. $25. Back to the midnight open range again. Change in direction. Premium. Tap one. It's 520. Consequent encroachment. Fulfill. Tapping that 3 a.m. candle again. Ali, Darren, I missed the session about DAX. What's your downside objective? Right here. I have this as my downside, Ali, at 110. And then we'll see how it acts at 110. Gold is still sideways. Bitcoin is still sideways. Oil finally broke down below that low. We'll come back inside this candle. I want to see this roll over and come down. Look at this here. 58.25. It's kind of like Disney, right? Look at that wick. Break it into quarters all the way on the downside. And then Disney. Sorry, man, it's still going lower. I hope you're out of that, Craig. I hope you were able to save some of your loss there. Unless you're into the long haul. $15-minute. There's nothing on a 15. There's nothing on a 5. Nothing. It's all downside from there, Craig. This is too choppy for me. Everything's just too choppy. But luckily we have learned to recognize high resistance liquidity rounds. 2 years ago, it would have been a disaster for me as a new trader. Thanks, Darren. We owe you a lot of work. You're very welcome, Hans. Well, you can definitely realize very early that we're in high resistance, right? Versus something that gives you a cleaner market. Even these are small little candles. And don't forget, this is August. August is always, July and August are always typically chopping months anyway, because markets just bashing back and forth. We're expecting cleaner markets to appear in September. Everybody gets back to work. They're off their little vacation. They're all paying for their vacations now. They're getting back to the Hamptons. Now they got to get back to work again. Right? So September. And then October, you're waiting for a big seasonal tendency for a big reversal. So just kind of keep your eyes on those levels for your seasonal. Go back through your seasonal tendencies on your daily and just look for that seasonal tendency and wait for that fair value gap to occur right above an old swing point. As soon as you see a market structure shift and that first fair value gap, tap into that sucker, and that's the run for the rest of the year into December. You're still in that, Craig? Disney? There's your next box filled. You're through the 50%. See how we zoom in on that right there, Craig. Zoom in on it. 50%. See how you trade below it? Now we're running low into the 25% range. So discount 1, discount 2, discount 3. Those next 3 objectives there. Next 2 objectives. See how we're already closing below it? I'll let that last 75% get hit. We could see a pop back up into here, alley, and go lower. I'd like to see that stay open, and maybe you'll see an institutional order flow entry drill. The next hour, where are we at now? 36. So this makes a small candle here, pops back up, gives you a little entrance into this, or taps that candle, then continues to roll over and come lower. If we get back through this level, we're back into that order block breaker again. You got the low, the open, and the mean threshold, which is this premium box again to tap before going higher. It's got to take that one out to go higher for me. Otherwise, I'm still looking at this, still bearish down inside that range to 50% at least. And look at your lower time frames for confirmation and for where it breaks and you see range extension. Disney is a swing for me. You're on it. Okay, Ali, thanks. Disney is a swing for me. Okay. I hope you nail it there, Craig. I hope you nail it. Little piggies is just sitting there. I think this is going to be it for me, you guys. This is just too choppy for me. I'm still looking for this area here, but even if it comes into that area after all this chop, I would expect to see some serious price action move. There's nothing going on here right now. So this has been a nice little Thursday reversal so far. So I'm not convinced. I'd like to see that. I would like to have seen that sooner, like 11 o'clock, and then the continuation, but we may see a lunch hour there or not. So anyway, that's it for me. I will see you guys tomorrow bright and early. You guys have a great afternoon. Price action definitely made me work for every penny today. Thank you, Darren. Appreciate you. Tough day for sure. You're very welcome, man. So I couldn't get anything more, but just trying to stay on the horse there is, it's better to look for cleaner markets that are giving you, better price action for sure. Oil's still coming lower now. We're hit the 50%. So I expect to see oil reaching down into here now. Thanks to you. Very welcome. If you guys are new to this channel, subscribe. We're here every morning trying to help you guys out. And again, you're going to see choppy markets like this. We're going to try and give it to you as accurately as we can. When you get super high resistance like this, the best opportunity is to stay out and practice your entries. So when you see guys taking trades on the side in high resistance liquidity runs here, they've obviously got a better bead on the market, or they're risk averse, or very low leverage. So be careful when you're trading in high resistance markets like this. You can expect it to turn on you rather quickly. But recognizing this, look at that. You look at that and say that's not a clean market setup right now. So just be careful when you're looking at these markets. Stay out of them. If you're new to the market, you're just going to get beat up and frustrated. And all it's going to do is reinforce fear of missed trades. And you're in a summer, so this is the kind of markets you can expect over the summer, this chop. And then we'll wait for something cleaner to start cleaning up again in September into October. So until then, thanks for tuning in. I appreciate you all. Sweet Asian dude. We bounced right off the first fair value cap of the week from last week, 1 minute. Thanks, Darren. You're welcome. Mark, let's see if this 3 AM candle holds its chop. So I'm on the higher time frame to see the 3 minute, if the 3 minute holds. So if you see this hold on the 3 minute, and then you want to run back up into that 3 minute up there, I kind of mark that up as your last 3 minute hourly candle. So you never did answer my question whether or not you trade from 3 minute to 3 minute. If that holds and you bounce back through that and you get through the premium, maybe aim for that higher one. I'd still be aiming for my objectives here, and then the 3 minute candle. Yes, I do. If it goes from 3 AM to 3 AM, okay. Yeah, I noticed it yesterday when you go back through back testing this, you'll see it quite a few times. It'll bounce between 3 AM candles. Yeah, so that's it for me, and thank you guys very much for tuning in. Hit the like button, it helps the channel, and I'll see you guys tomorrow.